Hi, I'm David Bassanese, Chief Economist at Betashares. This is a snapshot of my latest market trends report. And really, the theme of February has been hopes of a soft landing for the US economy that have supported both bond and equity markets in recent months, morphed into concerns of no landing. What we've seen of late is stronger than expected activity data in the US and also some higher than expected inflation reads. And as a result, markets have started to fear that the US central bank would need to raise rates even more to slow the economy and get inflation down. Firstly, in terms of the bond market, we've seen US 10-year bond yields move higher over the month, 10 years yields moving up 40 basis points to almost 4%. In Australia, we've actually had a slightly different situation. The economic data of late, if anything, has been on the softer side. We've had some weak employment numbers, some soft retail spending. We had a relatively benign wage outcome as well. So the markets, if anything, the case for more aggressive Reserve Bank interest rate increases lessened. But nonetheless, a local 10-year bonds also moved higher in the month, up around about 30 basis points. Not as much as in the US, but still up to around 3.85%. So we've got a situation in the bond markets now where the US and Australian markets are pricing in another 3, possibly 4 interest rate increases over the next few months. Obviously, that concern with regard to interest rates has had a negative impact on the equity market. So the MSCI All Country World Index was down 2% in February after a very strong 6.4% gain in January. The ASX was down 2.9% in February after a 6.2% gain in the previous month. What's been interesting also is that European stocks actually held up in February. Europe has been actually a standout performer in recent months with energy prices declining, fears of a hard landing for Europe on the back of Russia's invasion of Ukraine, and the initial surge in energy prices has eased somewhat. So that's really been supportive of their market. Turning to currencies, again, the concern with higher interest rates in the US has seen the US dollar strengthen and the Aussie dollar weaken. Now, in terms of the outlook, I mean, first and foremost, it does seem clear that central banks are going to continue to raise interest rates in coming months. I think the RBA is still going to raise rates at least twice. I don't see the case for further rate rises beyond that. So the market's probably getting a little bit too ahead of itself in terms of what it expects the RBA to do. But certainly in the case of the Fed, good reasons to think they will raise rates at least twice, if not 3 more times as well. And really, in terms of the equity market, we're just watching and waiting to see the impact of these rate rises on the economy, and particularly whether or not inflation can slow, because unless it continues to slow in a meaningful way, we've got a situation where the Fed is going to continue to raise rates and potentially tip that economy into recession. So it is still a fairly cautious outlook for equity and bond markets over the next few months. That's pretty much it from me for now. Thanks for watching, and I'll see you again next month.